Well, hey, I'm gonna.
Well, you're recording. Hey, hello, everybody. Welcome back to the RationalInvestor.com's Daily Brief Recap. Kevin and I are having a fun adventure here this morning, making sure that we have this recording and operating. I hope that we're working. I have no idea. No, we did the daily brief, and actually, we had a super long daily brief today. We had our chief technology officer give us his report on the site and the screeners. And you can see breadth data is starting to populate, so that's looking good. And screeners are starting to populate. Super excited about that. In fact, actually, this was a list of just the screeners that I put together for Friday. Actually, I don't know whether no, this is an old one. Anyway, I had a nice little. Maybe it was over here. Here it is. Not a bad. Like you get a nice little list in your email first thing in the morning, and not a bad list here. I mean, gee whiz. I'm big on the breakouts, and basically all this was just a simple screen. Where was it? And I'm wasting everybody's time here this morning, but hey, it's lots of fun. What the heck? I think it was this screen that I put together. But as you can see, we're still doing betas. I think we have to actually open it up here. There we go. So a whole bunch of screen criteria, and then I just hit run. You can get notified in your email, and look at that beautiful little list of stocks that are breaking out. And as I showed you a moment ago, here they are. And I mean, gee whiz, nice performance. Boom. Boom. Little boom. Little up. I mean, it is up. I don't know whether I'd buy that gap or not. Look at that. Nice move on the Duke Realty Corporation. And I thought this was kind of interesting. I was joking in the site this morning. Guess what time of year it is? Tax time. So what a surprise. Stock like H&R Block is starting to break out here. Anyway, so a little bit of a sleepy morning here in the market. So as I said just a moment ago, we had Monday mornings. Our CTO does his report, sort of updating the site, and also his sort of prognostications of Bitcoin and those kind of things. And I love the different perspectives that we have on TRI's site on a daily basis. But also, too, we had our special once every couple weeks. Jamie comes on from the UK and does a nice little macroeconomic breakdown of what's going on in the world. And for whatever it's worth, Jamie officially gave us the word that there is no meltdown today. Woohoo! Thank you, Jamie. We can all sleep better at night. Looking at our dashboard here, not a heck of a lot of change in the market. Like I said, Monday mornings, yeah, kind of often when I was prop trading, we would just sort of let Mondays play out and let sort of things set up into the Tuesday, Wednesday kill zones. So, not a big surprise to see a bit of sort of waffly first thing out of the gate here Monday morning. Not a bad idea to take a boo at the good old US dollar index. And, we've come up against previous highs and previous lows. This was at 38.2, and you can see how we're coming up against a trend line. So, not a big surprise to see some resistance coming in here on the US dollar index itself. Risk on, risk off. Stock market's still pressing higher. Of course, because we are in January, we want to keep an eye on the January barometer to give us sort of a feel for what to expect. As this study suggests, here is the first day of the year's price action. Now we have the first, actually, beg your pardon, this is the first day and the first week. And you can see a similarity in theme sort of forming here. So our next job is to watch the first sort of full month of price action. Based on what we saw right out of the gate, not a big surprise to see some uppy. We did see a pullback, and it made two successive lower lows. So my hunch is there's probably some sort of pullback here due. Then a bit of a sideways, which would make sense. Ides of March, then rally into the spring. Sell your stocks, sell when it goes, all that kind of fun stuff. June's usually a bit of a consolidation month in the market. Then sort of setting ourselves up for the ramp up into the fall and the election finally in November. So on balance, that's generally what I'm thinking here. My hunch is, as we sort of progress through these daily brief recaps, we're going to see price action follow along these lines. But it'll be interesting. In essence, you can see we're right at a pivot here. We could double top and fail here, and if that's the case, well, that would basically be in line with expectations. We'll see how it goes. Only time will tell. Nobody knows for certain, but I do like following this January barometer. It's a cute little tool. Risk on, risk off in general. We're kind of like all over the map here of late, and I do get the feeling that that's a bit of a theme in the market, and it might be for 2020. Jupiter-Saturn crosses, ends of very long cycles for stock markets. Huge Saturn-Pluto events, change of financial systems. This is going to be a pretty crazy year, folks. No doubt about it. So interestingly enough, we're seeing some absolutely dramatic moves in some markets here right out of the gate. Keep in mind that, technically we've come to the end of a 17.5-year commodity cycle, and we actually should move into a 17.5-year commodity unfriendly cycle. So be careful on the commodities, folks. I did a first 2 weeks of the quarter study, sort of just to get a barometer feeling for what the fund managers are doing with their money right now. And I noticed the first 2 weeks of the quarter, they are getting the hell out of materials and energy. So be careful here, folks. I got a funny feeling that the commodities markets will start 2020 very strong, but I think they're actually going to finish the year kind of weak. So I do like, especially if I can find good fundamental stories where the companies are earning money and they have a decent share structure. I love those kind of ideas, and good fundamentals speak for themselves. But poor fundamental names in the commodity space, be very, very careful, please. Dangerous. Also too, when it comes to something like gold, we're heading into the seasonal peaking time. January is supposed to be a seasonal peak for gold. Silver does a little bit better. So I wouldn't be surprised if silver sort of outperforms gold here for the next month or two. But, who knows, maybe it doesn't. But seasonally speaking, gold usually tops out in here in January. And of course, everybody should look at that chart and go, oh, gee whiz, there's a letter of the alphabet we don't like seeing. And I kind of had mentioned this earlier. Yen is actually breaking the new lows here. Remember we had talked about price gaps on that yen chart, which kind of worried me. Where the hell is it? Here, is this it? No. Where did I put that? I guess it was over here, right? We're, through daily brief and, on this site we're talking about day trades a lot in the market. But suppose we can move that back to like a daily chart. All right. But look at this yen, just right on its knees. And remember, there's that funny gap that I had talked about that I really felt made me feel uncomfortable. So holy moly, what a whipsaw. And also such a great lesson, everybody. You've got to wait for the W on the other side of the trend line to believe this kind of bullish resolution, and clearly this has been resolved bearishly. There are cheeky gaps on the yen all the way down here, so just be wary of that. I suppose there are some traders that are going to come in and step in on the long side against these tails, but super, super dangerous. And the problem that I have here is if this is the way yen is looking, oh boy, I got a little bit worried about the gold market here. So be careful, everybody. I think I've said that a couple times. And I think, as I had sort of pointed out, you saw on that daily chart, and you can actually really see it on these gold stocks. I really like the idea of actually hunting put options. Interesting on Newmont was upgraded today, which sort of caused that rally. But even on that upgrade, on that rally, you can see it's just running into a stiff wall of selling here. And of course, our biggest gold stock in the world, man, do yourself a favor and learn this concept called outside downside key reversals, because that was one hell of a signal. And you can see that Barrick's actually broken the new lows again here this morning. That's not the signs of a bull, everybody. Be careful here on the gold. We've talked already a little bit about the oil market already in correction mode. And kind of like what I showed you that first 2 week study, holy moly, the fund managers are selling gold and they're selling oil and they're selling anything that's commodity related. It's a bit scary, to be honest with you. Seasonally, we should expect the oil market to bottom sometime in the middle of February, right? Buy your unleaded in the middle of February, sell it the middle of May, made money in mine out of the past 10 years, blah, blah, blah. So I am looking for that, but this is a bit of a disconnect. And the interesting thing with the S&Ps is I do like the idea January barometer, market finishes the month relatively strong. Once we get into February, my hunch, and I've said this before, the stock market's going to look over at the commodities markets and oil and say, gee whiz, what the heck are we doing way up here? And I think they're going to have to come back down. But I don't think that happens till the end of the month. The bond market, I'm still short, and I would prefer to stay short. But lots of back and forth, and of course, huge wick up top here. So I wouldn't be surprised if we have to actually come back up here. I'm short through an option, which means I don't really have a lot of flexibility. I do have to roll the position out into a later month at some point down the road, but it's still, the option's a few months away. So there's nothing really for me to do. And what I'm really worried about here is the Fed and, ECB. ECB, Sjord on the site today showed us that the Dutch are now actually charging their customers to keep money in the banks. So Lagarde has said she's open to exploring new monetary policy themes for 2020 out of ECB. The Fed has said that they're going to re-examine inflation policies going forward. And, we've talked lots about how the fact that I think we're at the end of a 35-year interest rate cycle, and now we should just generally expect higher interest rates going forward. The only question really here, is do we have to do some sort of technical bounce back up against the top end of the range, which, is completely realistic. 50% level alone would just be simply retesting 161 here. So we'll see how this goes. And, for me to actually get an outright buy signal on the bond market, I'm going to need the market to trade back to this trend line, break the trend line, and then W on the other side of the trend line. And just like what we saw with the Japanese yen, I'm not holding my breath for that kind of event to happen. Anyway, that's sort of what's going on there. Big hurry up and do nothing, really, for me at the moment. Stocks, some up, some down. We did talk a little bit about the marijuana sector and the broiler chicken show. Somebody had asked me about a particular stock. There are a bunch of names that are bottoming. I happen to have them on a few of the names on the screen here this morning. The only problem with this sector, and somebody had asked me about another one, and it looked like it, I can't remember the symbol just off the top of my head, but it looked like it was putting in an inverted head and shoulders. And you can see there, some of the pot stocks are catching a nice little bid here this morning. The one that I played was this Canna Trust, CTST. And I bought the double bottom here. So I can't do anything here today. And really there's nothing to be done. I seriously took a look at some of these other names. Problem is, like this little T-God, love the chart. Problem is, there's a million, bazillion, gazillion shares out. And same thing with this AFIA. I love the chart. I like the trade. There's just so much stock out on these companies that it's sort of like, okay, you know what? This to me doesn't seem like it's chasing value. This to me seems like a classic momentum play. I'll play the momentum play. A trade is a trade is a trade, but I'm not really. This wouldn't be something where I would go to the public. Hey, look at this is really good value. This is a place where you can have retirement money working. I think this is just nothing more than a trade. But at the same time, too, trade is trade is trade. If you look at this CTST, you can see if it has any legs. There's lots of room to move up. Same thing on this AFIA and same thing on this TGOD. What I would prefer for AFIA and TGOD, and really Canatrust for that matter too, is roll the stock back. Make it only have like 20, 30 million shares out. Then I'm like, all right, you got to load up on these things. But right now, they're trades. I'm in. I'm enjoying, the pop off the bottom. And, I've got like David's Tea and, a couple of the other beverage plays that are CBDs and stuff. And I wouldn't fault you if you were trading this move in the pot stocks. But I just wanted to comment on that. As for crypto, I'm not really seeing anything new here. I spent a lot of time in the broiler chickens yesterday talking about Bitcoin. What I would consider Wycovian checks going on right now. I'm still looking for a move up into this sort of, let's call it $9,000 area. The only thing that sort of leads me to believe that this is the end of the move, not the beginning, is we do have a fundamental catalyst, the launch of the CME contract options. We also had all the other sort of, unregulated exchanges, a bunch of them all launched options products. So I have a feeling that's what the market's moving into. Nonetheless, if we do get a nice little pop, blow off top on that, then I'd actually consider that this move is done. And I'd want to sort of wait for the dust to settle for the sort of next setup. I do like the idea of trading this Bitcoin move, looking at like bot setups and stuff off of like lower time frame charts. Where's that chart? Something like this. So we have 1 kilo. We've got another kilo, another kilo. You know what? Now we're starting to talk about some levels. I'd like to see this trend line broken, which it has, and I'd like to see a W on the other side, which it looks like it's doing. So, 1, 2, 3, we're starting to get some numbers to work with here. And I had sort of said a few days ago that, if I did want to take a trade off of this looking for trend continuation, I just needed to see a little bit of consolidation. So interesting how 25 level, I've just eyeballed that. Obviously I'll crisp that up later, but interesting how that's basically right where we are right now. So, if we start getting W's in RSI, start getting W's in MACD, W's in OBV, I think you can make the argument. There's also a cute little lower time frame bot that also looks like it's setting up in here. So I'm feeling more positive. Of course, if we lose this low here in earnest, what's that low? 76.82, it looks like, somewhere in that neighborhood. 76.87, yeah, let's call it 76.82. Then that will mean that the market has M'd out here. And of course, anytime we see the market smiling at us, we know what to think. So fingers crossed, we turn back up. And more trend continuation, and just this little bot setup alone looks like it wants about 9,300 on the upside if this does play out. Tough to say. The only other thing I would say here is and it's interesting when you look at that Bitcoin chart and we have that AB equals CD inverted and inverted head and shoulders targets. They're up at about 8,900. So, a nice little stab up into this area doesn't seem out of the question. And then, like I said, if we M out here, then the rally's done. Sorry. Come back another day. Nothing really new to report here. I did go and pick up some calls on Ethereum. You can see she just started going sideways. Same sort of thing with Bitcoin. If we are higher highs and higher lows, Wycovian checks, we'll just stair step our way higher. If we M out here and crap out and close below this, let's call it maybe 135 area, somewhere in that neighborhood, then you know that she's just not ready to go. No real new names to report this morning. The message really hasn't changed, so that's why I really didn't change the screen that much. Reload zones, W's. Well, you can see the logic here. You have no idea whether this thing is going to ratchet up or crap out. But I could completely understand people coming in, taking trades off the bottom end of the range. You just need to understand and acknowledge the fact, everybody, we're still in a bear. And until you actually start seeing green on these screens, it will stay a bear. So, there's your market. I hope you guys enjoyed that presentation. Nothing really earth-shatteringly new to report here this morning. But just another typical day in the market. Just another manic Monday. And you got to listen to the old man sing a little. All right. Have yourselves a great day, everybody. We'll see you all again tomorrow. All the best, and bye for now.